CNBC-TV18 and CNBC-TV18.com.
Welcome back. You're with us on Editors Roundtable, and joining us now to discuss the market further is Saurabh Mukherjea, founder of Marcellus Investment Managers. Saurabh, good evening. Thanks a lot for joining us. I believe you had a trip to the US. Tell us, what's the feedback? Because, the markets in the US have been quite volatile, and the Fed's clearly been indicating that they're still some distance away from that pivot. What was your feedback?
More than the Fed, the bulk of the discussions on my trip focused on China because without any prompting on our part, the institutional investors that we met, the pension funds and endowments that we met, articulated their alarm at the situation in China, specifically whilst we were over there, whilst we were in America. This new Politburo, the new Politburo under Xi Jinping got created, and you must have read in the press that the Politburo's composition is alarmed everybody across the world. So what we heard from
there's a bit of an issue with, I think there's a bit of an issue with your audio, so we're just going to try and fix that. But one thing I thought we had done away with was the word pivot. We've used that word so much. Finally, I heard you use it again. I thought we've put that away for a while.
There were a lot of memes on the word pivot actually this weekend. All I needed was pivot. So from being, the pivot was what, from hawkish to dovish, right? The pivot it is, from hawkish to more hawkish.
You guys heard the news of sort of moving away while they fixed the issue with Saurabh. Baiju's getting on Messi.
Yeah. Absolutely.
We should ask Saurabh that. But I think we have Saurabh back. Saurabh, go on. Go on. Feedback from the US investors you met.
The level of alarm is quite high, and from what I could make out from these investors, they're stopping investments in China. They're stopping incremental flows to China. In fact, some of them have publicly said that they are stopping incremental investments in the Chinese stock market. And that sort of, to my mind, leaves them with only one relevant place to invest outside the developed world, and that one destination is India. So unless we score an own goal in India, we as in the country scores an own goal, I think flows into India from America will pick up in the foreseeable future, given that flows to China have basically come to a grinding halt. If you look at the data of flows into China, it's close to zero, and there's $3.5 trillion of Western money invested in the Chinese stock market. I reckon some portion of that moves to India. Even if a fifth of that moves to India over the next 3 years, you're basically looking at a virtual doubling of FII investments in the Indian stock market.
Okay.
This morning, actually, Tiger Global was another one which came out.
Absolutely. Yeah, Saurabh, thanks for joining us on the show. In fact, that was the point that Nimish was making a while back as well, as to how we're perhaps headed for a big breakout on the upside. For investors who are watching you right now and maybe looking to prepare for that upside, how do you approach this market? What are the themes that you're looking at? Because it's been a fairly decent earnings season as well.
Right. So I think, if you step back and look at what's happened in our country over the last decade or so, it's been a giant formalization story. Right? We till a decade back, we were a country with heavy levels of black money, heavy levels of informal activity, weak tax collections. A whole bunch of reforms have been expedited in the last 10 years. The result of which is tax collections are growing twice as fast as GDP growth. I never thought I would see that in my career, but tax collections are growing twice as fast as GDP growth. The flip side of that is enormous pressure on the informal sector, enormous pressure on low-income earners in the country. But the benefit is listed companies are gaining market share from the informal sector hand over fist, and that's resulting in them announcing capex. We saw that in FY22. We saw that in this set of results. Big capex announcements coming through because the listed world can see that the country is there for the taking. And I think that becomes the theme for the next few years. We continue formalizing this economy, connectivity improves, the GST numbers pick up. And as we formalize this country, cost of capital falls, financialization increase, and the FII is going to join that party. As the FIIs join that party, cost of capital further falls, and you see the economic uplift, the economic recovery coincide with the FII arrival.
Hi, Saurabh. Talking about earnings and the shift from unorganized to organized, one of those themes with the footwear space, and you've been quite vocal about Relaxo. Are they disappointed in the past quarter, but the story still looks strong according to you?
So I think we were quite happy with what they have done. We've been very strong proponents to them and to all our investee companies that, look, this is the time to go for the jugular, folks. We keep telling our investee companies, when input costs rise, if you're able to cut prices, and if you don't push through price hikes when input costs are rising, you by definition will kill the informal sector. So our plea, our request to all our investee companies is use this context, use this time of rising input costs, don't hike your prices, take a margin hit and kill the competition, because this is the best kind I have seen in India of going after the informal sector. In footwear, I would say 70-80% of the sector is informal, and therefore we are delighted with what the Relaxo management has done, is doing to kill the competition. 2 quarters, 3 quarters, 4 quarters of operating margin hits, we don't have a problem with, provided they gain market share aggressively and they basically clean out the informal end of the footwear sector.
All right, Saurabh, we'll have to leave it at that. Bit of a scratchy line there, but we got your gist. Thanks a lot for joining in. And with that, it's a wrap. But guess what? Next week, we're coming back and there's another holiday. Who's excited? Come on.
Final truncated week of this year.
Final truncated week of this year. And what are the big weekend plans?
I'll be watching Brahmastra, which is releasing on OTT. So I missed it.
None of you is watching after all that discussion. The Fed.
I watched it live. I don't want to put myself to that.
There's lot better things to do over the weekend, I'm sure.
And there's a lot of sporting action, by the way. The T20 World Cup. There's a nice, great tennis tournament going on in Paris.
I think the finals are today, right? The tennis one?
No, today's the semi-finals, but finals, quarters, semis, and Sunday's the final, yeah.
Okay, so lots of things to do over the weekend, but we'll be back bright and early on Monday morning. Until then, stay safe.